Hi, welcome to the Rockport VAL Hotel training video. My name is Lynn Clark, Head of Customer Success here at VAL. In today's training, we will walk you through how to create a hotel asset from scratch, how to model room revenue sets, including projecting occupancy and ADR, how to set up market competition sets, model income and expenses specific to a hotel asset, set up valuations, create what-if scenarios, and view a few key reports. At the end of this training video, a hotel training guide is available to download in PDF format. At the bottom of the video, there is a video progress bar where you can jump to specific topics and view the table of contents. Let's get started.
To create a property from scratch, click on the orange New Property button from the main screen. Enter the property name and select Lodging as the property type. If lodging is selected as the property type, a total rooms field will display where you enter the total number of rooms in your asset. In our example, there are 100 total rooms. The address is linked with Google Maps and will auto-complete as you begin to enter the location of the asset. Click the Create button to create the model. When you open up VAL, at the top of the screen is the header displaying key performing metrics. On the left side of the screen is the navigation pane where we enter data into VAL and view reports. First, open up Model Settings and establish the timing of the analysis, which is starting in January of 2023 over a 10-year hold. In the Area Settings window, by default, VAL sets the total available rooms equal to the total rooms. For room revenue calculations, VAL uses total available rooms. For valuation room calculations, VAL uses total rooms. An example of when the total available rooms does not match the total rooms is in the case where rooms may be offline due to a PIP or otherwise unavailable. Next, let's enter growth rates. The growth rates are located in the Assumptions section in the navigation pane. There are 8 growth rates within VAL. However, you can add as many growth rates that are applicable to the property. Everything will grow by the general growth rate unless you specify an override. In our example, the general growth rate is 2.5%. Next, let's add room revenue. Every model requires a baseline room revenue set where revenue is projected based on the average daily rate and estimated occupancy of the hotel property. You can create an unlimited number of room revenue sets in VAL to run numerous scenarios adjusting the occupancy rate and ADR. In the occupancy percent rate field, enter a static percent or click on the pencil icon to enter a varying rate either monthly or annually to address the seasonality trends. In our example, let's select monthly as the frequency and enter 70% in Q1, 80% in Q2, 85% in Q3, and 75% in Q4. Click and drag to replicate the occupancy in every year of the analysis. VAL automatically saves data as entered. However, when in a pop-up screen such as this, clicking Save is required. In the ADR field, enter a static rate for room revenue or click on the pencil icon to enter a varying rate either monthly or annually to address seasonality trends. In our example, select annually and enter $180 in 2023, $190 in 2024, and $200 in each year thereafter. Click and drag to replicate in all years and click Save. Click on the Market Competition tab to create an unlimited number of market competition sets to reflect the market occupancy and ADR. Market competition sets can include a specific comparable or market average. In our example, we will call this market competition set Market Comps Average and enter an occupancy rate of 83% and an ADR of $187. We can now reference this market competition set in a room revenue scenario. Click on the My Property tab and click on the Add button located at the top right-hand corner of the screen. Let's name this 100% market penetration and enter 100% as the rate and select the Market Comps Average from the Unit of Measure drop-down menu for both the occupancy and the ADR. If we want to view the room revenue at 90% of market penetration, we can right-click and select Clone, name this 90% market penetration, and enter 90% as the rate for both the occupancy and ADR. Next, let's model other revenue and expenses. Revenue and expenses are reflected on a single screen, which makes it easy to model an item based on a percent of another and link. Every VAL model includes a room expense line item by default. In our example, the room's expense is 30% of room revenue. Click Add from the top right-hand corner of the screen to add additional revenue and expense items. Revenue and expenses are organized by types, which is how the items will be grouped on reports. Revenue and expense types include departmental revenue, room expense, undistributed operating expense, management fee, fixed expense, capital expense, and FF&E. In our example, select departmental expense and let's add a food and beverage revenue that is 5% of room revenue. In the unit of measure drop-down menu, you will see VAL supports all of the customary units of measure related to the hotel property type, including per occupied room, per available room, percent of room revenue, percent of total revenue, percent of line, dollar amount, and dollar per area. Let's select percent of room revenue. When entering a departmental revenue, you can right-click on the line item and select Clone as departmental expense to easily model the corresponding expense when applicable. The F&B expense is 40% of the F&B revenue. Our next expense is an undistributed operating expense. The general and administrative expense is $700 per available room. Our next operating expense is the franchise fee, which is 8% of departmental profit. Click on the unit of measure drop-down menu and select percent of line and enter 8% of departmental profit. Next, let's add a capital expense. PIP is a one-time amount of $60,000 in March of 2024. Click on the pencil icon to display a grid that shows every month of every year of the analysis. Enter the value and click Save. For the remaining income and expense items, we will leverage VAL's copy and paste functionality from Excel. Right-click on the line item and select Clone X times to add the same number of rows that exist in the Excel model. In our example, we will add 6 rows. Click Ctrl-C to copy the data from Excel and Ctrl-V as in Victor to paste into VAL. This saves a great deal of time when adding or updating expense details. In the valuation screen, set up an unlimited number of valuations to calculate a DCF, direct cap, or purchase price to value your asset. Let's set up a DCF valuation based on an 8% cap rate and a 9% discount rate over a 10-year hold. In addition, let's add a 2% cost of sale. Click on Add Valuation to set up the second valuation, which we will call As Is Room Revenue Multiplier. Select Room Revenue Multiplier as the valuation method with a multiplier of 6 as of the analysis start date. The valuation that is set to default is what will display on the header. We have completed the data entry component of our hotel asset. Next, let's review a few key reports. The cash flow report displays the revenue and expenses. At the top of the report is a summary of hotel metrics such as total available rooms, occupancy, and revenue per available room. The revenue and expenses are grouped by type, and there is a drill-down capability to view the details behind each line item. In addition, you can quickly view results of selected cells on the status bar located at the bottom of the screen. All reports can be exported to Excel by clicking on the Excel icon on the top right-hand corner of the screen. Toggle between scenarios to update results on all reports in VAL. Here is the baseline results on the cash flow, and here is the income based on the 100% of market penetration room revenue set. The Scenario Comparison Report compares each scenario so you can visually analyze and see how the baseline scenario compares with our other scenarios. Here, we can select what data attribute to display on each axis for comparison. You can also select which scenarios to include by selecting to include or exclude from the report. Click on the Valuation by Scenario tab to compare valuation results of each scenario. The Investment Analysis Report displays the IRR, cash on cash, and equity multiples. From the reporting parameters, select the value to be used as the time zero value. In our example, we will select the DCF valuation set, which has the exit cap entry included. The report will display a summary of the cash flow, the time zero value, and resale, and the unlevered IRR, cash on cash, and equity multiples at the bottom. Click on the Return Sensitivities tab, where several matrices are available for you to analyze the optimal investment opportunity. There are 4 valuation reports available by navigating the tabs at the top of the screen. The Sales Yield Matrix report displays the values based on a range of discount rates and cap rates. You can toggle between the valuation sets from the drop-down menu. The Prospective Present Value report calculates the value in each year of the hold and includes the residual value and going-in cap rate. Once you have identified which reports to include in your analysis, go to Settings and Package to create a report package where you can select the reports and click Create Package for VAL to email you an Excel workbook that includes all of your favorite reports in one consolidated package.
This concludes the Rockport VAL hotel training video. Additional resources are available to ensure you are successful, such as dozens of training video across all property types and on-screen step-by-step tutorials. Or feel free to reach out to our award-winning support team at support@rockportval.com to schedule a training or receive support, all at no additional cost. Thank you.